Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm. I'll be your host, and today I'm joined with Doug Hagren. Hey, Doug.
Hello, Kirk. Not just Doug Hagren. Doug Hagren, born and raised Columbus, Ohio, fan of the national champion Ohio State University Buckeyes. So just want to say it's been a good week. Happy 50th to me and Buckeye Nation. So for all of you out there that are Catholics and Notre Dame fans, my condolences. Next year,
Did
Marcus
something
Freeman's a good coach.
did something
Marcus Freeman's a
interesting
good coach.
happen?
You have your chance. What?
Did something interesting happen last week, Doug? I
It
didn't
happened.
follow it.
It did for me, maybe not for you, Kirk. And for those of you that are listening, Kirk is what we would like to say not an avid sports fan, unless it's hockey. If it's
Yeah,
hockey,
hockey.
Kirk's all over it. But for mainstream sports, generally not on top of the news. So
Not at all. I have a lot going on in my life, and college football is not part of that. So if I
well, I
got free
mean,
time, I got lots of stuff like skating in my backyard rink that I want to do. So
Kirk, you know what? I'm not surprised. You grew up in an area that has been largely devoid of college football. I mean, for the people that grew up in, come on, yes, okay,
BC, come
yes,
on.
Harvard, Princeton,
Doug
and Yale.
Flutie in BC was a
Okay,
big deal.
let's back up for a second. Princeton and Yale are still number one and number three all time in national championships when football actually had started right there in the heart of the Ivy League. So I'll give it that. But when for those of us that are counting the 1900s and on, that your region has definitely become a hockey and a basketball region. So it's kind of migrated to the Southern California, the South, Texas, the Midwest. I know it's not necessarily on the radar for a lot of people in the Northeast these days, unless you're a transplant. So
Yeah, yeah. Back when they had leather heads, the
that's
leather helmets. Yeah, it's a different era. But
yeah,
yeah, I'm more into the hockey scene.
absolutely.
So,
So
well, cool. So let's talk about this week. So Trump's been in for a very short period of time for what is it, 4 days, 5 days right now, and he's doing a lot of he's doing a lot of stuff, and
here we go.
here comes the craziness. Um, last week we talked a lot about just his policies and what that would do with inflation, deflation, and I think people just need to really think about it because we are. I would look at it as we are cautiously optimistic. So I think a lot of his policies I'm optimistic about, but I'm cautious because like any politician, and you may like or hate Trump, he's still a politician, right? He's good at. He's not a politician in a pejorative sense. He's a very different animal, but he still has to manage the people, right? He has to manage the politicians, and they are in the pejorative politicians, and there's a lot of good and bad ones out there, mostly bad, but anyway. So, but here's the thing. So if you look at what he's trying to do, right? He's trying to lower taxes, right? Which at some point will happen. Yeah, he's going to institute tariffs. He's going to close the border, and he's going to cut the government. So all those things have inflationary, deflationary effects, right? Cutting the government is going to effectively cut GDP because I think 40% of government spending, 40% of GDP comes from government spending, I believe at this point. So not all 40% is going to be cut, but a good portion of that. Let's say at least 10% of that. So you're looking at GDP being cut by at least 10%, which has to be made up in other areas. So you also have the fact that, and that is deflationary, cutting, firing people, which they're talking about layoffs of you have to come back to work or just don't come back at all. That will in itself cut a lot of people, and will be cuts. But cutting people will raise unemployment, raise the unemployment percentage, and it will also potentially lower, or not lower, but allow wages not to continue to rise because you have people to fill those jobs. So that, in a sense, is deflationary. Cutting taxes is inflationary. People have more to spend. Uh, you also have tariffs, which are inflationary because if you're tariffing other countries, all that really does is pass along the tax to you. So that's how it works. You can love or hate the idea. Effectively, tariffs pass along the tax to the consumer, and so if effectively tariffing people is inflationary in terms of the prices of goods and services. Um, Now, the challenge that we have, and then closing the border is inflationary for food prices and other low wage labor. Now, if you look at how that should impact us, and I'm holding out a caveat because Trump thinks outside the box with his stuff. So it's possible they could solve these problems at the same time. I'm not seeing it, so I'm not going to say it's yes or no. I'm just saying that he tends to be different. So I'm going to hold out that it's possible. But generally speaking, if you look at traditional economics, that should cause more inflation in our economy, and because of that, you have wages which are not necessarily going up with the added cut from government. So you might have most people getting into more of a pickle than they have been in the last 4 years under Biden, where inflation took off, people didn't make more money, and they were getting squeezed every single day. I know people blame Biden. I don't think the guy. I mean, I don't traditionally blame or give credit to presidents unless there's something that they're doing that has a very direct impact. Because effectively, what you should do is give credit or blame to Congress, because they're the ones that pass the laws. Now, if there's a presidential, if the president makes a statement and says, "Here's what we're doing," executive orders, okay, that's the president. But if it's done through Congress, the president doesn't get credit for that. We give them credit. They're effectively a figurehead. They're the chief cheerleader, like a CEO is of a corporation, right? That's basically what the president's job is. And so if they're doing an executive order, okay, I can see there's some impact. But generally speaking, it falls on Congress for credit and blame. Even though we don't give them credit or blame, they give it to the president. They take all the slings and arrows. So if you look at this environment that we're in, it's an inherently inflationary environment where Powell has lowered interest rates at full percent, which is not good. That's also inflationary. So I think what you'll find is either interest rates have to go up. And so I'd be surprised if Powell doesn't raise interest rates in the next 12 months. I'd be really surprised. I think he has to. I think he needs to put a clamp down on the markets and on inflation, or things are going to start to take off in a not necessarily good way. We had a lot of prices of goods and services on that average people have. Food, cars, rent. You had all that stuff that we all pay for that the rich don't get impacted because they have enough money to insulate themselves, where the poor do get impacted because they don't. They're squeaking by, so they don't have the extra. The other thing too, I want to make this point because we're going to keep coming back to this year because inflation is going to be such an important piece. The reason that the difference between the rich and the poor is their understanding of inflation, simply put, and economics, but inflation. Poor people don't have assets. They have liabilities, right? So they have payments. I have a payment plan. I'm paying for my iPhone every month. I'm paying for rent. They have payments. They don't have assets. The reason they don't become wealthy is because they don't have assets. The wealthy become wealthy or stay wealthy because they have assets. Here's how it works. Inflation causes asset prices generally to rise. And so if you have assets like a house, like a 401k, like a business, generally speaking, assets increase in value. So if I have gold, let's say, because gold tends to be a pretty close inflation hedge over hundreds of years, if I have gold and inflation's 10%, my gold should generally go up 10%. Not directly, but over time it should. So effectively, inflation doesn't harm me at all. So I got a pile of gold, then that's never gonna get inflated away. Never in air quotes, because it hasn't been, but it shouldn't get inflated away. If you have stocks, they should go up generally if we have inflation. If you have a house, should go up if you have inflation. Now, if you're a wage earner, you don't have assets, you're renting, you don't have a 401k, you don't have any assets, you have a lot of payments, you have like 5 cars, you have a bunch of payments, you're going to get poorer over time because you don't have assets to offset the inflation. All you have are liabilities. Now, liabilities get inflated away, but not payments. So if you're paying for payments, that does not necessarily help you, because your wages have to go up to keep pace with your payments. The problem is wages have generally not kept pace with inflation. So if, let's say you've got a payment of, I don't know, you're buying, let's say food, right? You're buying $250 a month on food, which I think is probably pretty cheap. But let's say you're paying $250 a month on food. Food prices go up 20%. Well, unless you're making 20% more in wages, then that food got really expensive for you. If your wages did go up 20%, well, you broke even, right? You're not moving ahead or behind, you're just staying even. So the challenge that most people have is it's really hard to get ahead in this environment because inflation is becoming so much higher. And yes, they've stated it low, but the CPI is low, but it's not that low. The inflation's become much higher than what they've stated. And so the average person is getting negatively impacted on this. So unless Trump is able to really squash inflation, which will be hard for him to do, by the way, I don't see how he can. Unless he's able to do that, then people are going to get more and more disenfranchised. So my prediction for the next 4 years is we continue to have the same kind of inflation we had. It's not going to be as high as it was in the early years of Biden, but it'll probably be similar to where we are now. It's higher than stated. It's uncomfortable, but it's not going to break the bank. But over time, that's going to eat away at your purchasing power, and it's going to make you poorer. I don't see how Trump is going to put a dent in that in the next 4 years. Yeah, I think it's going to be really hard to see that happening. I think the only way that we can deal with the problems that we have is growth, growing our way out of it. And frankly, I think that's going to be hard to do. So if anyone could do it, I'm going to hold a candle to him doing it, because I think it's possible. But it's going to be really hard for him to do. I don't see how it's possible, but I'm open-minded. So just that's the context of how we need to look at this year. We're going to go through this year in the subsequent weeks, but that's really the template you need to be thinking about for the year, is what is going to move the inflation lever up or down. And I think right now the markets are optimistically bullish. But also there's some stuff in there that I'm like, like we'll talk about it a little bit in the show today, but there's a wide breadth of participation in the upside, which is a positive for the stock market. Where the more participation you have by the more in number of companies, the stronger the bull market. The narrower the number, so if you have 7 companies leading and everybody else falling behind, that's not a good sign. But the smaller companies are participating. I think it's like we had a day last week or this week where we had more participation than we've ever had in a single trading day, where the most companies went up. So point being, you have a lot of optimism, you have a lot of bullishness. The markets are priced to perfection. I don't see that changing unless something bad happens or earnings disappoint. Right now in earnings season, if earnings start to disappoint, you might see the market correct. But at the moment, I'm not seeing indications of that. It looks like everybody's fine. So I do expect the markets to be positively buoyed, but it's not going to take much for the markets to correct. And so I think everyone just needs to have their foot on the brake at some point, so you're ready to slam your foot in the brake if the markets do correct. But I think it would be healthy if the market was 20% lower, frankly. I think it would be much healthier and much more sustainable. But so if we see that, then you might expect that we're going to see that sort of correction.
This is a public service announcement. Hi, my name is Kirk Chisholm, and I'm with the government, and I'm here to help. Doesn't that sound reassuring? Well, let's talk about how they're helping. The government needs your help to make our money worthless again. PPP loans, student loan forgiveness, helicopter money. Let's keep the party going until our money is totally worthless. Don't think it can happen? Sure it can. Just ask Zimbabwe, Venezuela, Greece, Germany, Hungary, Greece, Yugoslavia. Did I say Greece? As a loyal listener to their show, I want to give you free money. I'm giving away free money in one of these hyperinflationary currencies. Go to www.moneytreepodcast.com/free money and follow the instructions to get your free gift. I have a large audience and only a limited supply of these currencies. I'm not the Federal Reserve, so I will run out at some point. Make sure you get yours before I run out. Go to moneytreepodcast.com/free money. Follow the instructions and get your free money today.
We got a lot to cover today, Doug. Where do you want to start?
You come out of your opening monologue, and it's like my mind's just going boom, 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 boom on so many different thoughts, and I've got some definite charts and things that play into that to go over. But I did want to kind of say one thing here, and I like what you put up here. So I guess I'll start with what you've got here. So December CPI inflation was 2.9%. While the CPI inflation was 2.9%. Basic necessities which continue to outpace that. So, when the government says that the inflation is super low, well, that's great if you can cut out all the things you don't need. We've said this before, like TVs might be going down in value, but people aren't going out and buying new TVs every month. But what you are doing is you're paying for car insurance. It's the law in most states. I think maybe even all of them now. And if you're going to be out on the road with the risks there, you're stupid not having it anyway because of what can happen. Transportation inflation altogether is obviously up, and that's kind of in my kind of blocked a little bit, 7.3%. Car repair inflation, 6.2. Do you see a trend here? It's all relating to transportation. Then you got utility gas. I don't know about you, but it was like 2 degrees this morning. So guess what? That 4.9% gas inflation, I'm feeling it. Homeowner inflation. Well, guess what? Gas is part of that. And homeowner inflation isn't even incorporating that. Then you got rent inflation. All of these things are tied together and you can't avoid them. Food. Interesting. Food away from home inflation, 3.6. That's different than food at home. Egg prices are going up. It's interesting. I keep seeing people talking about $18 to $20 for a dozen eggs. Now, where I'm at, I don't know if the eggs are quality, but where I'm at, I'm still getting Costco eggs, and I can get 5 dozen for $19, $20. Although I did see the day when the egg prices, last time I looked, it was $18 for that 5 dozen, and this time it was $20.25. Now that may not seem like a big difference, but if you do the math, and that's a 20% hike right there from the last time that I actually paid for them. So, that's a massive change in just 1 week there. Thankfully, my starting value is a lot lower. You said something about, you were talking about inflation. So I want to continue on that for a second because, and by the way, if anybody ever listened to West Coast rap, you might remember a line from the group NWA where they said, "Don't get high off your own supply." And, this goes with the running joke of a theme we've had on this a couple times, but I do want to say that right now, I'm kind of, I have a commodity asset, and there's actually a chart in there if you want to pull it up on the rising commodity prices that we've seen, or what all commodities have done. And one of the best commodities you could have held on to over the last 5 or so years is coffee. And unfortunately, if I just held on to all the coffee that I bought in my house and just sat on it and bartered and resold it, just last year I would have had a 70% increase. Year before 12%. Then it was, 2022 was a little bit nicer, but they go back to 2021, 70%. The problem, Kirk, is I keep getting high off my own supply, instead of reselling this, unfortunately, and literally getting high because of the caffeine, I'm drinking through something that probably could be, based on the way it's been running, could have paid my mortgage over a couple of months. So I don't, this goes back to the thing about inflation of food outside of the home. One of the restaurants in Minneapolis that I highly respect, an incredible Southern cuisine restaurant called Revival, announced they're shutting down. They have been fantastically successful. Probably the best Nashville hot chicken you're going to get north of the Mason-Dixon line. But you know what? They just came out and said starting this year, they just got crushed. and the food, and it's gotten so expensive for them to run their restaurant that it's not worth it anymore. And they've seen a price point in which they can't push those prices any higher without seeing a turnaway of the demand. So people are moving into trying to cook and do more at home. But as you can see, like, again, coffee prices, you can go out and avoid drinking Starbucks. You can make it at home. You're still feeling it. The price of chicken, the price of eggs, the price of things that you need are going up significantly. And that's even making, in some ways, eating at home inflation at certain times, I don't know the current data, actually could be higher than the inflation of what you are paying when you eat out, because they can only raise those prices so high. There's economies of scale, and you don't have them at home. So, we're definitely feeling that pinch. But I also want to kind of go back on one thing you said there. And I think I know what you're trying to say, but I think there's a way to look at that in a little bit of a different note. So you talked about how the wealthy have assets, and then you compare that to, let's just use it generalization, the poor that don't have assets, they have payments. And then you talked about the inflation of everything else. And I think there's a really interesting thing to look at with that, which people need to note. First of all, if you are just buying things on payment, and you're using them to pay for things today you can't afford, then you're stuck, because you're basically paying that off with future income yet to be earned. And that puts you in a very tight position. And it makes it hard to invest and become wealthy, because you have to buy those assets. And for a lot of those individuals, they don't have the extra discretionary income to be able to put that to work to buy those assets. And so they are constantly on that treadmill. The other thing is, though, that the payments they're paying on, I will say this, payments on money owed do not have inflation. If anything, they're almost a hedge against inflation. It comes down to when you're making the purchase and the strategy behind it. So if you're obviously buying things you can't afford, that's problematic. That's a cash flow issue, and it needs to be resolved immediately. But I will say that the wealthy also understand that making payments does make sense in many circumstances when they look at the assets they have and decide whether or not those assets should be used for day-to-day living. The one thing the wealthy have advantage of, and they understand this better than anybody, especially the billionaires. Let's go back to X. Listen, I know Elon's waiting to get his big payout from his shareholders. That's going to help basically fund what he paid for X, but he didn't actually pay anything for X. He borrowed and used other people's money to pay for X. Why? Because his money staying invested in SpaceX and Tesla makes more sense. And so a perfect example of simplifying it down is housing. You buy the house, you have that asset, and that asset's going to keep going and going up. And a lot of people rush to pay off their mortgage because they want to get out of that debt. So they will try to give extra money down on the mortgage to pay it off as quickly as possible. And that can make sense. However, one of the things that you have to keep in mind is that those extra payments, you're not investing them. You're just giving them back to the bank. And there's an opportunity cost for that. That mortgage payment over 30 years, and we'll just use a rule of 72 if people are familiar with it. Take a rate of return, divide 72 by the rate of return, tells you how long it takes to double or half. And in this case, let's just say that you have inflation's going up by 7.2%. I'm going to say that because it's going to make the math easier. If inflation's going up by 7.2%, everything around you is increasing in cost by 7.2%. You know what's not increasing in cost? What's actually is your mortgage payment or the money you're paying on. So while everything else is getting more expensive, that payment is actually shrinking in relation to everything else over time. And so why I use 7.2% is because in the rule of 72, that's 10%. That's divided by. So it basically means that every 10 years, the stuff that's going up will double in price, but the stuff you're at now will basically become half as impactful to you. So if you can extend those things out and not pay them off, you're actually strategically keeping your wealth working for you. And why does that matter? Because this comes back to the inflation. If you have those assets out there and you can keep your money in those assets, and the billionaires have figured this out, then you already, and again, in this case, have the money to pay for something. You might actually be might be in your best interest to have payments on it, because over time, the cost of those payments will actually decline, but you're also keeping your money working on those things that are coming up with inflation. That is a wealthy billionaire mentality to many of the decisions they make. Now, not all millionaires think that way. There's a lot of millionaires, millionaire next door. They save really well. They still want to pay everything off, bring themselves back to the zero line. It's like I build up the cash, I pay it off, and back down. But the billionaires get this. And what I'm talking about is if you want to think like the billionaires, then you really have to look at where your money is and look at what's working for you, and then asking yourself if it's a good idea or not when you're making major purchases to spend your money, because once it's gone forever. And there's a lot of things in there, especially with regards to inflation, that come into play there. So,
Yeah. I mean, one thing I was thinking about, and I saw this just before the show, and a client had asked me about this because I know Trump just came out with a Trump coin. And I was thinking about it, and it just kind of hit me what it actually was. So, and then it came out with the Melania coin, like right after that. Anyway, it's a social. It's like the Dogecoin, right? It doesn't have any inherent value. It's more of like a social community
meme
value.
coin, they call them.
Yeah, it's a meme coin, but it's really about the social network. It's about the people who are part of that, who are bringing value to it in whatever way they're doing it. I'm not the expert in it. But here's the thing that I found, because I had a client email me and they're like, I never want to be a part of that. I'm like, well, I'm never going to put you in it anyway. It's just, I don't look at it as an investment. I look at that as like, it's like being part of social media. I don't think that's a good idea either, but people still do it. So, but here's one thing that just hit me. So the Trump coin, people bought it, rose up in price, it goes up and down in value. So it's basically a social network coin. It's the people who own it or determining the value of the coin. Here's an interesting thought. We have these, we have pollsters who are out there who nobody believes anymore anyway, because they're all biased. But you have pollsters out there who are saying, oh, what do you think of the president? Do you agree or disagree with the president? And, what's your approval rating? And all these things. Here is a direct impact of what you think of them and their approval rating. I think it's actually a really interesting idea. Hey, there's a president. Do you like him or dislike him? Buy the coin. Okay, if you dislike him, the value is going to go down a lot. If you like him, it's going to go up a lot, right? And I'm not saying people should do this, but I just find it an interesting overlay that I've not heard a single person talk about. It just kind of hit me, and I was like, oh, this is interesting. This would be a better determinant about people's opinion of them is based on the price of their coin, their meme coin. So I think it's an interesting idea. I think I wouldn't invest in it. I'm not suggesting anybody invest in it. I'm not investing in it. I would, it's just not my thing. But as an idea, I think it's really interesting to see where technology is going to go and how we can, as a public, remove the bias from our system. The gatekeepers to what is truth, because I think what a lot of people struggle with, and this is why the Democrats really got roasted in the last election, is they thought they were the final arbiters of truth. They should determine what's true and what's not. We need a truth committee. We need fact checkers. There is no such thing as truth, because truth is based on what people think it is. Right. I mean, I've had this. There was a great Marcus Aurelius quote, or it's attributed to him, and I'm going to botch it, but it's basically, there is no truth. There's perspective, and there's I'm going to have to look this up, but basically, the point is you look back thousands of years, our truth now might not have been true before. Like we might have, like when we had that, was it about 8 years ago now? When they were having that statues thing in Charlottesville where it turned bad. People were picketing. They're saying, hey, we want these statues. And other people are saying, no, they're wrong. And it doesn't matter, because at the time they put them up, it was probably a good thing, right? Because they wanted to honor these people. But today, people may not want to honor them anymore because culture and society has changed, right? I'm not judging whether it's good or bad. I'm just saying that things have changed. Right. So as things change, we need to adapt to that change, right? So the truth is, you look at some countries and people say, well, harassing and belittling women is just part of culture. And we look in the US, we say that's a bad thing. Well, who's right? Well, we say we're right. They say they're right. I feel like it's not a good idea, but I think you have to respect the fact that people have different opinions, whether you like them or not, whether they're right or wrong or not. You could argue that till you're blue in the face. That's not my point. My point is there is no such thing as truth. There's what we all agree on is true, right? And we all agree on certain things as being the best way to go about it. Like running around and killing people is probably not a good idea. Does it mean it's right or wrong? We deem it to be wrong. And so it is. But it's only because we decide as people that it's wrong as a society. So as you kind of get into, sorry, Doug just sent me this thing. As you get into what people's opinions are, what's the best way? And I know probably people have tuned out from listening to this already, but as you figure out, all right, so should a handful of people determine what's right or wrong? No, because inevitably those people get corrupt. They have their own ideas, which is part of the problem. I live in Massachusetts. We have a bunch of what we call limousine liberals, or not in my backyard liberals, the NIMBYs. It's like, oh, well, everyone should be this, and not my backyard though. We need wind power, but just not off the coast of Nantucket because I got a house there. And so it's not about what people should do. It's what they think people should do. Any sort of free market economy, the best result is determined by the populace. It's determined by what's the best price. Well, it's buyers and sellers agreeing on what the best price is. If I'm selling a widget and I'm selling it for $1 million a widget, nobody buys it. Well, it's the wrong price because no one wanted to buy it. If I sell it for a penny and everyone wants it and I don't have enough, well, it's the wrong price because it's too cheap. So any sort of free market operates with people making that determination. So I think it's actually a really interesting idea. If you had decisions that people voted on or bet on with their money, and kind of like, I think it was Kalshi that does this, you can bet on almost any outcome, political elections and otherwise. I think it's interesting because it's more of a natural determinant upon who's putting their money where their mouth is and who is deciding based on their behaviors. So I just think it's interesting. And I raised this because I thought it was a really interesting idea. No one's talking about this as the idea, but if you look at it from this lens, it makes a lot of sense. Yeah, Doug wants me to share this ethics and honesty chart here, which I find funny. Who are the most honest, very high and ethical and honest people? Nurses, grade school teachers, military officers. That's interesting. I wouldn't have thought that would be that high. Pharmacists, medical doctors, also wouldn't have thought that would be that high. Police officers, okay, that's higher than I would have thought. But then you get in the low end, lobbyists, they probably deserve that. Members of Congress, definitely deserved. TV reporters, yep, definitely deserved. Interesting, 13%, that's high for reporters. Advertising, car salespeople. Car salespeople are less negative than TV reporters. That's funny. Anyway, it's just kind of funny.
And you got TV and news were both on there separately. And I think there's, just the pattern of where you're saying information's coming from. We clearly are at a point in which we are increasingly doubting the information we're receiving from those sources.
Yeah. And I want to wrap it up and hand it back to Doug, and then I got a few more points at the end. There was one thing, because I interviewed a guy about he was head of a large copper company, and so this chart that Doug had was talking about the energy transition, right? Transitioning into meeting our energy needs in the next 5 years, which we're not going to be able to meet, by the way. Things are going to have to slow way down in our progress based on the energy. So we need to be pumping out tons of nuclear power plants, and we're not even there yet. So hopefully Trump can do a warp speed project on nuclear plants because we're going to need it. My conversation with this gentleman, Gord, head of a copper, I think it was World Copper Association or something like that. Anyway, so a big copper company, and he was talking about the amount of copper needed for the energy transition, and it's a lot more than we have. And according to this, we need about 293 new mines needed for the energy transition, and that's in copper, lithium, graphite, manganese, cobalt, nickel, phosphoric acid. I mean, there's a ton of stuff that's needed, and so, what's really interesting is a lot of our policy is run by progressive people, right? It's run by, we want a cleaner planet. We want, we want to save the planet, save the birds, save the, the turtles from going extinct, and that's not a bad thing. But when it hinders human progress, like for instance, right now we have a big energy demand problem. Now, I'm not suggesting we fire up a bunch of coal-powered plants and fire up a bunch of gas-powered plants and all this stuff, because it's going to dirty the planet. I'm not for a dirty planet. No one is. But what I am saying is we've got ourselves into a bind because the environmental peaceniks that want a cleaner planet also shot down nuclear, which is one of the, if not the best energy production for load power. And I want to be clear, load power that we have right now. Because when the sun goes down, solar doesn't work. When the wind stops blowing, the wind doesn't work. But nuclear is load power. It's on all the time. It is a consistent source of power that we can rely on, that increases the amount of power in the grid. We've got a lot of energy problems we have to fix. Our grid is not great. It's very poorly created and maintained. We have a lack of cheap, clean energy. Nuclear can do that, but it's going to take a long time to build up these plants. And so what do we need to fill the gap? Coal. Coal is going to fill the gap. So for all the peaceniks that decided that nuclear was a bad idea, you know what you did? You shoved us into the hands of the coal industry, because we need to fill the gap. The only way to do that is coal. Cost effectively, right? You could do it other ways, but cost effectively, it's the only way to do it. So they're the reason why we have a dirtier planet, is a clean energy crowd, because they're not thinking from a logical standpoint. They're thinking from an emotional standpoint, and emotions don't solve problems. Facts do. And the fact is, nuclear is the solution for this. And I'm glad that we have politicians that are actually listening, partially because the tech industry realized that they're all screwed if they don't have more power. So they're the ones that lobbied and pushed Congress finally to do it. Good or bad, I don't like our system, but they did get it done. So hopefully we can get Project Warp Speed on that, because we really do need it. If we want to have progress in this country, if we want to have progress in the world, getting people out of poverty, helping with all aspects of society, we need cheap, clean energy, and nuclear at the moment is the only way to do that. Hopefully we'll have better things in the future, but right now that's the only one that's going to solve our problems. So hopefully we can have these policies that open up more mining. That is, and I didn't know this, that Canada actually has the most responsible mining in the world, where they have the best policies, where other countries come to Canada to figure out what is the most safest, environmentally friendly way to mine. People use Canada as the template, which I didn't know. I thought that was interesting. So anyway, so those are things that we need to happen. Those of you who are against Trump and his drill baby drill, or mining in the EPA, I can tell you that you're causing more problems by not letting it happen, because people become more impoverished, they become poor, and the best way to bring people up and out of poverty is cheap, clean energy. And the only way to get there is by more nuclear, or hopefully similar if you get to, talking about fusion, fission. They've got all these things in the pipeline. I don't know when that'll happen, but nuclear power plants right now is the way to go. And the people who stay in the way of that are actually harming our clean planet more than they're helping. So just my 2 cents. It was a really fascinating conversation. If you guys haven't listened to it, listen to the one with Gord. It was really cool. Doug, I got some more things, but Doug, you want to take it from here, and we'll.
Yeah, I'll jump in on that a little bit. So I just posted things. So the USS Abraham Lincoln aircraft carrier can operate for 20 years without refueling on 2 efficient nuclear reactors. Imagine if all the cars, I'm not saying we should be running around because we can't drive and ships aren't running into each other, but imagine if all the cars on the planet we're driving around with a nuclear reactor, which is kind of the goal that they want to do with hydrogen fuel cells, is because obviously that's still a clean production. But I actually have another map that showed that France hit a record of 95% carbon-free electricity production in 2024 because of the nuclear power that it uses. Now the red, well, that's their neighbor Germany. And guess what Germany's running off of? Old school energy sources like coal. So you're looking at, so clearly it's just, I saw this as something that kind of, just exemplified what you were referring to when it came down to, the impact of this, of what this green energy that we're trying to get to. And if you're talking about 250, or I'm sorry, let me look at that again. 293 new mines to be able to extract from the earth all of these materials. And there's been plenty written about what it does to the earth to extract lithium. Again, copper, you're generally getting into lead and mercury. There's plenty of issues that you can go out to Colorado and the Rocky Mountains and see areas that are absolute ghost towns because of pollution.
Toxic.
Phosphoric acid, nickel, all of these things very hard to get into. SpaceX is trying to find a meteor that has all that to make it cleaner. But look, right now, that was exactly where I was going to go, Kirk. Right now, that's not clean energy. That's absolutely disgusting energy to extract that stuff out. And then, by the way, it often takes a lot of dirty energy to actually then refine it and produce it. So the number of steps in there are astronomical. But then in terms of carbon footprint, and then as you're showing here, look, we got a long way to go. 60.7% of world electricity generation is still coming from fossil energy. Coal, others, natural gas is the majority of where that's coming from. They're up to 5% solar, 14% hydro, 7.8% wind, 9% nuclear, 2.3% bioenergy. This is, we've got a long way to go. But again, the expense of putting these things in, and we've said it before, you and I, and hopefully most people listening, don't want a dirty planet. But what we'd like to do is get to that clean planet in a way that doesn't completely and utterly undermine the economic and the social stability of the entire planet at the same time. And I think that's the struggle that everybody has. Now, if we want to take a look at inflation, I have another chart on there. Again, going back to how Americans spend their money, I spent a little bit of time talking about this last time. Transportation, 13,000, housing, 25,000. In annual expenditures, this is typical when you're looking at an average of 77,000. Is the average they came up with. How they came up with that, I'm going to go to another chart that's going to show you a little bit as it breaks down. But again, if we're looking at personal insurance and pensions, 9.6. Again, personal insurance is going to be auto, healthcare 6.2, food at home 6.1, food away from home 3.9. By the way, did anybody look at that chart that we just talked about where inflation's happening, right? And that is what 70% of the household expenses that are coming, that people are paying for, which is of course leading to why it is that people that without those assets are struggling. There's another chart here, it breaks it down by state, the living wage of a family of four. And again, they were talking about 77,000 in expenditures on that other chart. That's the average in expenditures. And again, expenditures are very different than wage. The living wage for a family of four is greater than that 77,000 in expenditure in every state of the country. Okay, so if you take a look at certain states, the least expensive state in terms of a living wage needed for a family of four is West Virginia. This is, by the way, Kirk, this is coal mining country out there. And so, you're talking about the least expensive. Now, that if I look at this quickly, Alabama, Mississippi, Arkansas, Kansas, that pretty much rounds out the states that you can get by on a living wage of under 90,000. Then you get into a lot of the Midwest is going to be in that $90,000 range. Where I'm at, Minnesota, we're in that $90,000 range, as well as North Dakota. I live right by the St. Croix River. You pop across that river and boom, it jumps 10 grand on a living wage to be able to afford that. You get to the coast, California, 188. Kirk, you're in Massachusetts. You see what it takes to have a living wage in your state? $200,000.
Second highest after Hawaii.
Exactly. And
Out of California.
unbelievably expensive. New York, 156. We said this before, I think, in our last conversation, is like New York, it tends to look a little bit lower, but that's because on the southeast side of New York, you have incredible cost of living. You get out to the western, and upstate where you got Buffalo and places like that, completely different economic situation there. But this is definitely, definitely a picture of why families are strained. And I did have a chart that I showed last. I don't know if we jumped to it last time or got to it, but we are starting to see an uptick in credit card defaults again. And as people are trying to figure out where's my living wage? You just mentioned not keeping up with regular inflation, and that's obviously impactful to households. And those that have assets are pulling ahead, and those that don't are struggling. By the way, speaking of those that have assets, I'm going to jump around a little bit here. Asset class performance, since we talked about the election, since Trump was elected, what has done the best? Well, you talked about the Trump coin. A lot of people believe, strong rhetoric around backing crypto. Bitcoin had slipped into the low 90s. It's back up. It's been up 39%. Just since November in his election. The S&P 500 growth side, 5.7%. As a whole, only 2%. Commodities, Brent oil, up 5.6%. The U.S. dollar's up as well, which is interesting because usually when the dollar's up, that is actually a downside pressure on commodities. Less dollars to buy more things. Since then, though, and this goes through January 14th, you talked about small caps. They've been coming back a little bit recently, and they actually aren't down as much as many things, which for small caps over the last 5 to 10 years is incredible. They've really struggled. Emerging markets, bonds, not so bad. Gold is down. European equities, internationals being hit. China down 10%. U.S. real estate down 7%. Emerging market equities down 6%. So a value, we've talked about. Value just continues to be a dog, although minus 3%. That's not so bad considering, but that's only 2 months. So you annualize that, that's getting pretty nasty. So, just to kind of look at where things have popped since the optimism of his presidency comes in. But I do want to point something out. Now I'm going to get away from logical to spiritual. So take a moment, everybody, put your hands together and pray, or go back and think of the way that the pagans would have looked at things. But we are now looking at the Chinese calendar. We are now entering the year of the snake, Kirk. And so if you're going to make any decisions for investing around your zodiac, it's important to know what those zodiacs have done in terms of investment. And I'm here to point out that I know you said things look good, but according to the Chinese calendar, Kirk, I would sell everything right now. I'm just kidding. Joking. Don't take my advice. But the year of the snake is the second worst average returns of all zodiac cycles. It has averaged a 0.6%. This is from Macro Trends. And by the way, I cannot attest whether or not this is a massive chart crime. I have no idea how many years back they went on the snake.
1928.
Thank you. 1928. So not bad. That's actually a fairly long track record. They're not going back the 5,000 years of the Chinese calendar, which would be a better chart. But 6.6% return. The year of the horse is the only one that's worse at negative 0.2. That's the only one that has lost money. Year of the rabbit and year of the pig are leading the charge, as well as year of the dragon, pretty good, over double digits. If we can get in those years, you're looking 11, 13, and 18 between dragon, rabbit, and pig. But I just want to say, Kirk, this year, according to the Chinese calendar, take your money, park it in cash. Like the dollar's been rallying since Trump got elected. So that's not necessarily a bad investment decision.
Yeah. Well, when I move to China, I will keep that in mind, Doug. Correlations versus causation, as they say. Yeah. All right. I'm going to mention one thing and we'll wrap it up here. And it back to Doug. But I also want to point out just a quick thing. There was a funny thing that I saw, and I don't know why this silly thing is doing this, but I'm getting some weird overlays. Well, anyway,
Not seeing it on our end, thankfully. So
yeah, I'm seeing the visual. Anyway, all right. So here's something I saw, and it just made me laugh. State Farm's canceling a planned commercial by the insurance giant in the Super Bowl next month. Citing the impact of wildfires, our focus is on providing support to the people of LA. We're not advertising, blah, 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 blah. What's funny about this is, so they're canceling their commercial because they're supporting the people of LA. Isn't that your job as an insurance company to pay for the insurance? Is that what you mean by support? And I'm just poking fun. They could be doing a lot. I don't know. But I just look at this and my mind goes to, oh, so you mean you're going to pay out the policies that you owe the people? That's your support? Or it could be you're pulling the commercial because you owe so much money that you can't afford the commercial anymore. Either way, to me, it just looks like positive spin PR for a disastrous, oh my God, we're going to owe a lot of money. Now, to be fair, these insurance companies don't go bankrupt because they manage the risks well enough. So what they do is if they have a lot of claims, they have a lot of risk that is offloaded off their sheet. So worst case scenario, they don't get blown out. What they'll do is they'll find a reinsurance company and the reinsurance company will take the brunt of it. So it's kind of like, it's actually in many ways much like gambling. And I've never done this, but I knew somebody growing up who was a bookie. I never gambled, but I knew him, so we talked about this a lot. And he said, well, what the bookies would do is they would take your bet, right? And they try to balance it out. Say they take $100 from Doug and they take $100 from me, and so their risk is zero because no matter who wins, you get paid by the other person, and you get your 5% vig for the difference, right? So they're trying to balance that out. Well, what happens is in some games, so I go back to like when the Patriots won their first Super Bowl in modern history, everyone was betting on the Patriots, right? So you got a Boston bookie. Well, everyone's taking Patriot bets. Well, how are they going to balance that? What if they won? So they have to pay out all this money. Well, they would have lost, they would have been screwed. So what a lot of them would do is they would sell that bet to somebody else, that like a higher end, like somebody in the West Coast, or I forget who they're playing, but anyway, so but when they the other team, they would find bookies over there and they would balance it out so they'd be able to have a net zero. And that's a lot like what insurance companies. Now the bookies might decide, well, I actually want to take a little extra risk on the Patriots because I think they're going to win. So they balance in their favor, but that's on them. But just like a good risk manager and a good casino, the casinos are the same way. They let people bet. They know what the odds are over time. More people bet, the more the odds are going to run in their favor. Of blackjack, they make 5%. It tiddlywinks, they make 10. Doesn't matter. Like they know the odds. Insurance companies are the same way. They're running the odds based on data, based on actuarial tables. They're really good at this. They've been doing it for hundreds of years, and they're really good. So when you have an insurance company that is getting blown out by these fires, they're not necessarily getting blown out because the risk is being managed through reinsurance companies, which is basically they sell their risk to a reinsurance company. Now, here's a chart I found, which I found interesting. This is the combined market value of America's insurance industry. Now, some of this is health related. You see the size of the United Health Group, which is pretty big. You see some of these other companies, Travelers, they're not all doing health. Some of them are doing property casualty. Some are doing life. Some of them are doing, different things. But the point is it's interesting to see the size and how big some of these companies are. I mean, Progressive has gotten huge. Some of these are a lot smaller than I would have thought, like Travelers or the Hartford or MetLife. I would have thought they would have been bigger. But yeah, United Health Group surprised me the most. $473 billion company. Anyway, I'll wrap it up for this week. Give it back to Doug. But I just find it interesting. We always learn a ton about the insurance industry when we have catastrophes. And right now, LA is a catastrophe, and I don't know what's going to happen. But all I know is there's zero leadership out there, and they're all looking for someone to blame, and it's not them. It's always like, well, is Trump going to give us money? Well, we couldn't do anything because Trump didn't give us any money. Like, well, actually, this problem was caused by you. So why don't you guys figure it out? I'm very empathetic to the people, but the politicians are they're just a cancer on that state. Anyway, Doug, wrap it up. Where can people find more about you?
Sorry, State Farm wasn't on that either.
Nope.
So obviously we talked about inflation. We talk about this every time. Those who've been listening, you know that one of the areas that's the biggest inflation that everybody, no matter what your economic or income level or asset level is concerned about is the price of sending your children to higher education. So we're talking about college planning. And if you have college-bound children and the plan is to play any role in funding their education, there is information you need to know about concerning your ability to help prepare and pay for costs. The first thing is start planning now. Doesn't matter how young the kids are, start planning now. What is college planning? A lot of people think it's just saving for college. It's actually implementing and reducing college cost reduction strategies that could save you tens, if not hundreds of thousands of dollars. That's not so bad. It's important because, especially for higher income and higher net worth families, you're going to spend for college with a lot of after-tax dollars. That means that you may be more important for you to have effective college planning than someone who actually might be a middle income or low income. And a lot of people think it's just for them. So ultimately, what makes us unique is beyond just saving strategies. We identify strategies that leverage your unique situation to help you save on college costs, help you to understand if you're a business owner, their strategies, if you're high net worth, their strategies, if you're low net worth, their strategies, cash flow strategies, tax strategies, using family. Listen, these are all exciting. I talk to people every day. Are like, gosh, I didn't know that, and I wish I either wish I had with my first child, or I'm glad I know this now. But if you want to be one of those people, go to our website and start learning. mergentcollegeadvisors.com. That's MERGENT, mergentcollegeadvisors.com. You can actually download our scholarship estimator report, find out more information there, talk to us. We'll be happy to have a conversation. And thank you very much, Kurt.
Yeah, thanks for coming on this week, and we're going to wrap it up. Lots more to talk about next week. There's obviously a lot of changes going on with the new administration, and we're gonna talk about them, how they apply to your portfolio here.
That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kurt Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.